Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Welcome to Bitcoin Bulletin, where we dive into the world of cryptocurrency and bring you the latest news and insights. Today, we're talking about a dramatic supply crunch in the Bitcoin market that's reshaping its role as an asset. Institutional investors are ramping up their purchases, hoarding millions of coins, and drying up available liquidity. With daily corporate acquisitions outpacing mining output, experts warn of a looming imbalance that could redefine Bitcoin's volatility. According to Strategy, a Bitcoin treasury company, they buy over 2,000 Bitcoins on average daily, while miners produce only 450 units per day. The real gap is much higher as more institutions join the Bitcoin race. But what does this mean for the future of Bitcoin? A new report by UTXO's Guillaume Gerard and Will Owens predicts that, by the end of 2025, institutions will invest $130 billion in Bitcoin. And in 2026, that amount will grow to $300 billion. In fact, according to the Bitcoin Treasury's website, as of May 2025, 3.35 million Bitcoins were held in corporate, state, and various other treasuries. Only nearly 800,000 Bitcoins are held on corporate balance sheets now. So what's driving this trend? Strategy Chair Michael Saylor claims that his company is not going to sell any of its Bitcoins, and assuming others follow suit, the supply of Bitcoin is shrinking at an ever-increasing speed. Government and private companies are buying Bitcoins without intention of selling, which means more coins will disappear from circulation at an ever-growing speed. According to CryptoQuant CEO Kai-Young Ju, Bitcoin's annual deflation rate is minus 2.23% thanks to Strategy's activity. Now, we're seeing more Bitcoin treasuries emerge like Nakamoto and 21 Capital, which could further exacerbate the problem. As these new treasuries occur, Bitcoin will increasingly lose liquid supply. The market situation may drastically change. According to UTXO's forecast, 2026 may see less volatility, increased transparency or reserves, and a change of Bitcoin's role from a seized asset to a strategic reserve asset. Bitcoin-based decentralized finance platforms could get bigger, but the new era will also see a drastically lower circulation of Bitcoin. What does this mean for regulation? At least two U.S. bills are seriously impacting the Bitcoin sector, the Bitcoin Reserve Act and the Genius Act. These could potentially boost BTC purchasing as well. But not everyone is optimistic about institutional investors buying millions of Bitcoins pushing up the price. Investor and trader Willy Woo says that these buys offset risks through parallel respective short sells. On the other hand, some experts like Matt Haugen from Bitwise predict Bitcoin's price may reach $200,000 in 2025. He says the gap between increasing demand and shrinking supply will eliminate those 4-year cycles with their several-fold ups and 90% drops. So what does this all mean for Bitcoin? The Bitcoin supply shock is already here. Increased buyer pressure in conditions of dropping supply could make the BTC price more stable or pave the way to new highs. Selling it at a preferred price will be easier. Buying it back will become harder. Bitcoin may lose its vulnerability to macroeconomic factors and cement its reputation as a safe haven and strategic asset. That's all for today's episode of Bitcoin Bulletin, where we keep you informed about the latest developments in the world of cryptocurrency. Thanks for watching.